about the investment in the stock market. Is it allowed to purchase a share? Is it allowed to purchase an equity in the stock market? And if it is allowed, so what is the criteria? And if it is allowed, so how can we calculate the dividend purification? So this is my first topic, and I will describe about it. And my second topic would be about the Islamic finance and what is the difference between Islamic finance and conventional finance. But I will not take more than 20 minutes because I need to give you more time for questions and answers. So let me explain first thing, and that is about the investment in capital market, investment in the stock market. According to Sharia, if you want to invest and purchase a share in the stock market of United States or any other country, you can purchase, but with four conditions. There are four main conditions. So four main conditions you can do. The condition number one is that, and this is the criteria number one. There are four criteria. So the first criteria is that the company, the investee company, the basic business of the investee company should be halal. If the basic business of the investee company is halal, then you can invest in that company. For example, if the basic business of the company is the mobile or furniture or the cement company, or the company is selling bottle, or company is selling, for example, juices, or the company is the is the real estate company. So these all businesses are halal. So if the basic business of the company, investee company, is halal, then this is the criteria number one, and you can invest in that company. But if the basic business of the company is not halal, for example, if the company is the manufacturer of wine, then you cannot buy the share of that company. If the company is the entertainment company, you cannot buy the share of that company. If the company is the banking company, insurance company, leasing company, any financial institution, then you cannot buy the share of that company. So this is the criteria. Number one is that the investee company, the basic business of the investee company should be halal. So this is the first criteria. Second criteria is that we know, and this question arises, that almost all the companies, they take the loan from the banks, and company is selling mobile, company is the IT company, the basic business is halal, but they are taking loan, interest-based loan from the banking institutions, and they are running the business from the banking, from the conventional banks. So how can a Muslim purchase the share of a company which is taking interest-based loan from banking institutions? So there was a long debate among the Sharia scholars what to do. So yes, conventional loan is haram, and for the management, and for the board of directors, this is completely haram. It is not allowed for them to decide and to execute the conventional loan documents. But this is for the board of directors, and this is for the management of the company. They cannot execute a loan document, conventional loan document. But for the shareholder, and specifically the sleeping shareholders, like we are, when we purchase a share in a company, we are sleeping shareholders. We don't have the power to implement any ruling in a company. So Sharia scholars have given a ruling that if the non-compliant debt, interest-based debt, is less than 30% versus total assets of the company, then you can invest in that company. For example, if a company is the mobile phone company and total assets of the company, for example, are $100, and this company is taking loan, and the loan value is $33, for example, it means that the value of the loan is more than 30% of the company. So you cannot invest in that company. But if the total, if the conventional loan is less than 30% is versus total assets of the company, then you can invest and you can purchase the share of that company. So this is the second criteria, is that if the interest based debt versus total assets is less than 30%, then you can buy the share of that company. So this is the second criteria. And both the criteria should be followed and should be maintained. It does not mean that any of the criteria may be followed, then you can purchase. No, both the criteria should be followed. So this is the second criteria. Third criteria is that now this is the problem that number of companies, they are working and they are engaged in a halal business, but partially they are doing non-halal business. Partially they are selling haram products. For example, if a company is selling for example, if a company is a supermarket, but they are selling wine. If a company is IT company, but they are earning some income through interest-based transactions, because they are placing their excess fund in the banking institutions and they are earning interest through the banking institutions. If a company is the gas company, but they are earning through wine selling. So this is the problem nowadays, that number of companies, basic business of these companies are halal, but some of the income of these companies are haram. So Sharia scholars are of the view that if the haram income of the company versus revenue, if the haram income is less than 5% versus revenue, if the haram income is less than 5% versus gross revenue, then you can invest in that company. So this is the criteria number 3, that if the haram income is less than 5% versus gross revenue, then you can invest in that company, because you will hardly find a company which does not place its excess fund in the banking institution and they are charging the interest from the banking institutions. So this is the criteria number 3. And we have to follow, and if we wanted to invest in a company, so we have to check whether the company is fulfilling the criteria or not. So this is the criteria number 3. Criteria number 4 is that the number of the companies, they are investing, they are doing the halal business. For example, they are the manufacturing company, they are the IT companies, they are the trading companies, their basic business is halal, but they are investing in some other avenues which are haram. For example, they are investing in the bonds, in the government bonds, in the private bonds, in the banking institutions. So their investments are non-compliant. Investment, not income, investments. So if the haram investments, non-Sharia investment versus total assets is less than, if the non-compliant investment is less than 33% versus total assets. If the haram and non-compliant investment is less than 33% against the total assets, then you can also invest in that company. If the non-compliant investment is more than 33% versus total assets, then you cannot invest in that company. So there are four criteria. Number one, the basic business of the company should be halal. Number two, 30 debt to total assets should be less than 30%. Haram income versus gross revenue should be less than 5%, and total investment, haram investment versus total asset should be less than 33%. So if any company fulfills all the criteria, all four criteria, then you can invest in that company, and this company would be considered as Sharia compliant company, and you can invest in that company. Now, and how can now here arises a question: how can we find a company? Because every individual cannot read the financial statement, cannot download the financial statements from the websites. So all the information is available on the websites, but everyone cannot find the time to check. So for that purpose, there are number of applications, authentic application. They provide these services. So if we wanted to invest in the companies, so it is the requirement to check whether these companies are Sharia compliant or not. Because we are Muslims, we are not allowed to invest anywhere. We are required to check whether these companies are fulfilling the Sharia criteria or not. If the companies are fulfilling the Sharia criteria, then we can invest. And if these companies are not fulfilling the Sharia criteria, then we should avoid, and only we should invest in the companies which are fulfilling the Sharia criteria. So this is all about the investment in the stock market, and definitely you will be having number of questions, and topic is very long, but today is not the weekend. That is why I am skipping a number of other areas, and now I will discuss something about the Islamic finance, and also I was requested to say something about the difference between Islamic finance and conventional finance. And yes, please. At the end, yes. After the topic, yes. And after towards the, is it okay? Okay, fine, no problem. Okay, so I'm giving you time for question and answer on this topic. Then I will come on second topic. So now you can ask the questions about this topic, stock market. Yes, please. I know. Yes, you can use the Zoya. Yes, Zoya is the reliable app you can use. Yes. Yes, please.
So, coming to the first point, you said the nature of the business has to be halal. You mentioned example, let's say company X Amazon, straight to the, they don't, let's say they don't manufacture wine, but they sell wine. Right? So one aspect thing you spoke about is investing. Right? The other aspect which a lot of people don't know is the matching contribution towards organization. Like for example, if I'm donating $1,000, if we have a benefit program that we can invest on this time. So if I cannot invest as an individual, how can I do a matching of the benefit for a religious person?
I did not get your point. Can you explain more?
So for example, I donate $1,000 to to a masjid, right? And I work for Amazon. Right?
Okay.
I cannot invest in Amazon because Amazon sells wine online. So as per your point, they're dealing with wine and I cannot invest. So as a person, I cannot invest. How can I invest their contribution towards the masjid's construction? Salary. You're not benefiting.
Please, can you explain the question? Because
Is the something in US called maximum.
okay,
Let's say,
okay,
and I want to donate from $20,000 to the private. What is they give $1 for another. Let me put up to let's say $10,000. Whether it's that let's say Amazon share the market, but let's say I completely they're not. Let's see that
okay. So actually there are two aspects. Number one is the investment in the shares. This is another topic, and Sharia ruling may be different from the employment, from the charity, from the donation.
Nobody addressed this question. Nobody asked this question. So asking about, oh, how can I invest in COVID, that cannot be a word of. So if you are not researched on this, maybe I request you to find out more about the benefiting programs. Can we have a contribution towards religious organizations?
Allowed, no problem. This is not an issue.
Okay. The second point is you said 30% loan versus the total value.
Yes.
Or total valuation of the company at 0.8.
Yes.
Now let's say today if I invest, I meet the criteria,
Okay.
right? But for some reason the company is going to debt or the valuation goes down. So the loan ratio to the total asset may go to 20%. What do I do at this? Do I take one investment now and when it complies again go back again and invest? How do we keep?
Yes.
Even though this transaction is at one point of time, I see that the loan ratio.
It happens. It happens many times. It happens many times. So actually, that is why we follow the criteria of the 30% debt to total assets and not the market cap. Why? Because market capitalization changes. That is why we use the criteria of total assets because the total assets are locked for at least 6 months or 3 months. And we normally, the screening scholars, they log the criteria for at least 6 months. So after 6 months, they issue the new index. So that is why new index are issued after 6 months, and the quarterly reports when the companies issue the quarterly reports or the biannual report, so you will see the total assets. You cannot see the total assets every day. Okay? So please give me time to because let me explain what is your real question. So first thing that we are using the total assets now, not market cap, because market cap changes. So that is why now for 6 months you will not find the compliant and non-compliant are changing. So at least for 6 months you are safe. After 6 months, maybe your stock will become non-compliant. If your stock is Sharia compliant, after 6 months you have become non-compliant. So Sharia scholars are of the opinion that if your stock is in profit, you have to sell. You have to sell it, and you should sell it. If your stock is not in profit, so you can wait. Whenever your stock is in profit or is in break even, you should sell it. So this is the Sharia rule. And what is the logic? So we can discuss individually, inshallah. You see. So actually, the current criteria before 7th October, the criteria before 7th October was the 5% criteria. 5% criteria. If the weapon manufacturing was more than 5% versus gross revenue. So this company was non-compliant, non-Sharia compliant. So if the weapon was if the income of weapon was more than 5% versus gross revenue, then this company, this Boeing or any company, any manufacturing company is non-compliant. But now we recommend that we should not invest in a company which is killing innocent Muslim community. This is our recommendation, whether it is weapon or not. Yes, please. Yes.
Some tricky aspect, they have these percentages, 50%, 5% to 33%. What's the rationale behind these percentages and why do they differ? Why does not one set percentage that everyone follows?
Actually, there are number of debates, and scholars thought which percentage we should decide. 5%, because 30%, 33%, 37%. Because if they decide 10%, so then people will ask why you decide 10%. If they decide 33%, so then people will ask why 33%. If they decide 40%, then people ask why 40%, why not 30%? So definitely they have to decide anything for the promotion of Islamic finance and to give any ruling to the public. So this is based on ijtihad, and this is based on negligible. For example, 5%. 5% income, why they decided 5%? So 5% income is negligible income. So there is nothing in Quran and Hadith about the 5%, that 5% is the negligible item. But urf and people, when you talk with the people, they will consider the 5% is a negligible item in anything. So that is why scholars they decided that 5% is the negligible item. So if they decide 3%, the same question arises: why they decided 3%? Why they did not decide 2%? So it based on the collective ijtihad, and some things definitely if they are not clear in the Quran and Hadith, scholars they decide themselves. Yes, please.
Sorry,
Yes, thank you.
follow up on this one is that Sharia policy refers to which particular board?
Number of scholars, because AOF, mainly AOF scholars, they have decided standards. Yes, in AOF standard, they have decided by that way. No, as I mentioned, that borrowing the money even for a 0.0001% is not halal by the board of directors and by the management. I mentioned in my speech that this is not halal by the board of directors, by the management. we are discussing about the minority shareholders. This topic is for the minority shareholders, not for majority shareholders. For example, if we are the majority shareholders, 51%, if we have the 51% shareholding in any company, so we are not allowed to take any loan in the company. So, single penny of interest-based loan is not allowed. But what we were discussing is about the investment in a share, where we are a minority shareholder. We are not in a management. We are not in the board of directors. For the board of directors, for the management, it is not allowed to execute a single document of loan, conventional loan agreement. Yes, please. No, actually, employment and the shareholding both are different things. Employment may be halal or may be haram. If the employee is working in a department where there is no involvement of interest-based transaction, if employee is working in IT department, if employee is working in the trading department and employee is not involved in the finance department, in the interest based transaction, then this is not a problem for the employee. But employee is working in the treasury department of the company, then this employee is responsible and it is not allowed for the employee to work in the company. So this is for the employment. Now, yes, please. Okay, now I have to come on second topic, and I will not take more than 10 minutes on this second topic because I was requested to discuss something about the difference between Islamic finance and conventional finance. What is the difference between Islamic finance and conventional finance? Because many people think that there is no difference between Islamic finance and conventional finance. So, there is a difference between Islamic finance and conventional finance in the procedure, in the documentation, but not in the result, but not at the end result. Why? Because according to Sharia, when we discuss about the riba based system, about the interest based system, so interest based system means that one person is giving the loan to another person and is charging the profit on the loan. And this is haram in Islam. If a person is giving the loan to another person and is charging a profit over the loan, this is haram and it is not allowed. But on the same pattern, Allah subhanahu wa ta'ala has allowed to charge the profit, but not on the principles of the loan. But Allah subhanahu wa ta'ala said, Ahallallahu al-bay wa harrama al-riba. Allah subhanahu wa ta'ala has allowed to charge the profit through the bay. So through the bay. Bay means sale purchase transaction. Asset backed transaction. Al-bay means asset backed transaction. So Allah subhanahu wa ta'ala has allowed us to execute sale purchase transaction, any asset backed transaction, and in asset backed transaction, you can charge the profit. No problem. For example, I own the house and I give you that house on rent and I am charging the profit. How? I am charging the profit in the rent, in the form of rent, because I am charging you the rent. In the rent, I am calculating that I have invested the funds in the property and I am returning back my investment, my profit, and Allah subhanahu wa ta'ala has allowed. Why? Because the house is the property, house is the asset, and Allah subhanahu wa ta'ala has allowed to charge profit against the asset. This is my mobile. A person comes to me and asks me, give me $1,000. I ask why? He tells I need to buy a mobile. I tell, okay, which mobile you need? He tells this mobile. I say, okay. I go with him in the market. I purchase a mobile. I take a mobile from the market. I take the possession of the mobile from the market in my hand and I sell the mobile to that person in $1,200. And I charge 200 profit through the mobile, through the asset. This is halal. This is profit. I am charging. And I am charging, for example, and it is also halal to charge the profit with same rate of conventional banking. Conventional banking is charging $200. I am charging profit in $200. Halal, no problem. Why? Because I am charging profit through the asset. Conventional banking system is charging profit not through the asset. According to Sharia, you can charge the profit against the commodity. And what Sharia prohibits? Money plus money plus money is equal to riba, is equal to interest. This is haram. And if you are charging profit, money plus commodity, you are charging money against commodity. It is halal. This is not a problem. So this is the Islamic banking. Now I come and I give you the example only for the house financing, which is available in the United States. How they are charged in the house financing? Islamic financial institutions, they are partners. They are your partners in the house. They purchase house with you. So they are purchasing an asset with you. And they are not giving you the loan. Conventional banks, they are giving you the loan. They are not participating in an asset. So from the beginning, Islamic banking is coming in the participation in the asset. So this is the difference. This is the difference number one. Second thing, Islamic banking is charging profit from you. Islamic financial system is not a charity-based system. Sometimes people say that Islamic finance is costly. Yes, costly. So what is the problem? This is not a charity-based system. If it is costly, so it is another matter. But due to, if it is costly, so it is not haram. It is halal, even if it is costly. If the halal meat is costly, so it will become haram? It will not become haram. If it is costly, it is another matter, but it will not become haram. So, Islamic banking, in Islamic finance, Islamic financial institution is charging profit against rental. Yes. Conventional financial institutions, they are also charging profit, but they are charging profit against the loan transaction. Islamic financial institutions, they are charging profit against the rental contract. They both are charging profit. But what is the difference? Difference is in the process. Difference is in the transaction. Difference is in the procedure. We cannot see the difference in the end result. End result is the same. If you go in a market, in a supermarket, where halal and haram meat both are sold, so you will see both the meat. You will not find any difference. When you see, when you watch, you will not find any difference. But there would be a difference. What would be the difference? Only in the procedure. And what would be the procedure? Only one kalima. Bismillah Allah. Simple word, only one word. And that is the difference. And this difference is applicable in all Sharia matters. What is the difference between Muslim and non-Muslim? Two people are standing. You cannot see the difference. Today I met with one person, and I asked his name. He told my name is Umar. I thought he is Muslim, but he told I am not Muslim. So what is the difference between Muslim and non-Muslim? Only one procedure, and that is La ilaha illallah Muhammadur Rasulullah. So Islam is the name of procedure, not the name of the end result. End result is the same. When you go to the Islamic financial institution, they will not give you the Zamzam. They will also give you the Islamic transaction, and they will give you also the house financing. They will not give you the Khajur of Medina. When you ask them to, I need house financing, I need commercial finance. So they will not give you the Khajur of Medina. They will give you what? What you need. But according to Sharia. If you have any question about the Islamic finance, please ask. And thank you so much to invite me. I came here again. Last time I also came, and I remember that, mashallah, last time also you all participated, and today you all also participated. And thank you so much. If you have any question, yes, please.
Forgive me if my understanding is wrong here. Between conventional and the Islamic. In the Islam, you say that we are buying access to their example. Now, if I go to the county, the record in the county, the house belongs to me amount. Nowhere does it mention that Islamic institution is a partner in that. Right? So they have not, but my documentation it doesn't say. My documentation clearly says loan amount. It's an Islamic financing. It clearly says loan amount. And the rate, which you say it is expensive, I don't care about whether it's expensive or expensive. Right? But the rate, when you close it, the day you close it, it's also dependent on the rate on a day, which fluctuates on a daily basis, the APR or whatever. Right? So it is again, and behind it, we are making payment to the US. So they take loan from US bank, and they pass on that loan to us, the same rate, whatever is the rate. So how does it begin to differ between us?
So first thing is that, yes, thank you so much. Good question. First thing is that they execute Musharaka agreement with you. In Musharaka agreement, you agree with them that this property is shirka between me and you. From day one, when you execute Musharaka agreement with them, with the financial institution, you agree that the property that I will purchase, so this property would be Between me and you, 80-20, 90-30, 90-10, 70-30. So you are executing the musharaka contract. Without musharaka contract, no Islamic financial institution can proceed. If you don't execute musharaka contract, so they will not participate. They cannot proceed with you. So this is the answer of your first question. Second question is that the service bank can be any party, no problem. For example, if I open my bank account in any US bank, this is not a problem. So if any Islamic financial institution appoint any US bank as service bank, so this is not a problem.
They're appointing as a service bank or they're taking as.
I know.
If I come back to your point about 30%, let's say they are taking 70% loans from the bank. You give me 100% loan. So 30% will come from the.
They are not taking any bank from any bank. I know. Yes, please.
Some of this Islamic bank. Heard this now.
Okay.
They sell the loan.
Okay, yes, this is a good question. This is a valid question that they are selling. Yes, you said that they are selling a loan. Islamic financial institution, they are not selling a loan. I can tell you, they are not selling any loan because they don't execute any loan contract with any client. They execute musharaka contract. Yes, they execute musharaka contract with the client. Okay, and they sell the shareholding in the property to the government agencies. So the Islamic financial institution, they are the shareholders in the property. So they sell their shareholding of the property to the government agencies. So this is not the sale of the loan. This is not the sale of the contract. This is the sale of the shareholding. Yes, I wanted to give you one disclaimer. Sorry, I am not aware about the Lariba. Okay, so I don't know about Lariba. I give you disclaimer, but because now we are not talking.
Somebody has to pay the house. Or car, even whatever you name. Somebody has to pay the money.
Yes. So actually, without giving name of the any bank, actually the Islamic product, whatever I know from the United States and from all over the world, is that the musharaka contract. Any musharaka, Islamic financial institution, they are investors and they are partners in the property. And in the United States, they are selling the shareholding of the property to the government agency. Freddie Mac, Fannie Mae. Yes, please.
We gave the example of the South, right? You take the person, you buy for 1,000 rand, you sell taxing for 1,200. So if we picture this in the house situation, in the first one, it is cost, it is possession. You took the item, so you establish your cost of it, and you sold it. In the Musharaka one, where the bank doesn't feature except in the sense of paying the loan, how does the cost in possession of the bank transfer?
Yes, Cubs is there because without Cubs, bank cannot sell. So Sharik is the wakil. According to Sharia, Sharik is by default wakil. When you appoint anyone your Sharik, a Sharik is wakil in Sharia. So when Sharik purchases any property on behalf of second party, second partner, so when it purchases a property, so it purchases for itself and for its partner. So it comes for himself and for his partner. So kabzul wakili, kabzul muwakkil. So that is why when customer purchases the property. So after purchasing the property, the property is in the possession and ownership of the financial institution. So see the criteria of the cubs is also available. We insure by that way.
So, when there is my house, there are two opinions of two contracts. One is the Musagar contract, which is a financial institution, and then there will be another contract, which will be when you look at the conventional bank contract, it will be exactly the same. The only difference will be instead of interest, profit will be limited. So, even the rates have to be the same. Instead of interest, profit will be limited. So, you have, I have a tip from my house. I have two ones. One with the regular situation, the Musagar contract. Again, which looks like very similar to the conventional contract, but instead of interest, it is mentioned as profit. So that's the only difference. But I have two ones.
Okay, so I know that what is the second contract? Second contract is the mortgage contract, and this mortgage contract is the security contract, and this is not the real financing contract. Real financing contract is the musharaka contract, and in conventional contract, the real financing contract is the mortgage contract. So mortgage contract in the Islamic finance is the musharaka contract. And in Islam, the mortgage contract was the security contract.
Is it preferable to buy over idea? But someone say, well, no, buying the cash is preferable. You will be in the statement that buying the cash is preferable over taking
It is your it is the it is your administrative matter. It is not the Sharia related matter. Answer is not the Sharia related matter. It is up to you. Okay. If it is halal, then you can do. If it is not halal, it is not halal. If it is halal, then it is up to you to do it or not. Okay? Yes. If you cannot afford, then we will advise not to do. Then Sharia will advise not to do. If you can afford, then it is up to you to purchase on cash or on credit. Okay? Yes, please.
One question. Let's say you are the bank. When we are together, we execute the start contract. But who is, let's say we are buying, who is paying the institution or is it the, like me, one of the key, although I have in there, I don't understand if the fund is being generated and made for somebody else, also some other bank. How does it get made? Like if guidance is not giving me the money, it's just the day from before, I'm still initiating a transaction that generates interest some with downwards. It may not impact me at my company, but it is impacting somewhere else, and it is happening because I started.
Okay, so it means that you should know and you should ensure that source should be halal. Okay, whether whether the guidance is paying, whether ABC is paying, American government is paying, or Pakistan government is paying, or any other person is paying, source should be halal. Okay, if the source is halal, then no problem. So Sharia board, let me explain you. Sharia board of the financial institution is supposed to approve the source, and Sharia board is doing and is approving the source of the funds. All the Islamic financial institutions are required to take the approval from the Sharia board of the sources of the funds. So in your case, I can tell you what is happening in your case. In your case, what you are referring, the financial institution is paying from its own pocket, not from any other from any other source. Yes, they are saving after execution of your financing. They are selling their shareholding to government agency. But your financing agreement, they are funding from their own pocket.
If it is still a shared, then the both should be shared.
Sorry, what?
Both of
Yes, why not?
they should be shared.
Yes,
Should be shared.
yes, yes. Okay, I can tell you that you mentioned three things. Number one, growth should be shared. Okay. Number two, downsize should be loss should be shared, taxes should be shared. Okay, so according to Sharia, taxes should not be shared. Tax is the should be paid by the user. If you are using the property, you have to pay the tax. If you are utilizing the property, what I am saying is in Sharia. Okay, you can check from any other scholar. What I have learned from Sharia, that you are renting.
I'm saying if I rent, they will. I'm owning, but I'm co-renting.
To whom?
Like the units are divided in terms of what they are charging me the rent.
Charging you the rent. So you are utilizing the property of the bank. So you are using your asset, and you are using your share and the financial institution share. So you are required to pay the taxes. You are when you are renting to anyone else. Okay, okay, very clear. Okay, so it is not it is up to you. But if you ask from Sharia point of view, so if you are a tenant, you have to pay the tax because you are using the property. If you are using the property, so you have to pay the tax. It is in Sharia. Okay, but if your owner is paying the tax, mashallah, he is a good owner. Okay. And second thing is that you are saying that the profit should be shared. Yes. If financial institution and you will sell in the market, if you both sell in the market, you will distribute. But unrealized gain would is not the gain in Sharia. Okay. And unrealized loss is not the loss in Sharia. If the property rate increases and decreases, it just decrease and increase in the books. Okay?
If I'm still using contract to say minus 7%, gain, and if I had an option, then the property
There is no loan, brother.
short right?
Musharaka. Yes. Please read the contract. And yes. Please allow them. I will talk with you. Allow them to ask here. Muraba contract means sale purchase contract on the installment with some profit. For example, I purchase this mobile in $100 and I sell you in $110 in 1 year installment. So this is called Muraba. Okay. Last question, inshallah. Islamic Islamic financial institutions, they don't completely buy the house. No. Islamic financial institutions currently they don't buy the house. This is asking just about the theory, partnership matter. No, no, you ask. He did not ask.
So, can you talk about the permissibility of the bonds?
Bonds is not halal because bond is based on the loan contract, and profit against the loan is not halal because government bonds, private bonds, they all based on the execution of loan. Because if the government issues the bond, so they take the loan from the public. If the private party issues the bond, so they take the loan from from the investors, and they give the return in form of profit, and which is the interest, and this is not halal. Yes, we have the alternate in form of sukuk. Now there are sukuk bonds, and sukuk bonds are the asset-backed bonds. They are halal. Now the number of European countries they have launched the Islamic sukuk, and these are Islamic bonds. Maybe. Yes, Satuma, yes. Yes. Yes, I listen also. Yes.
So I have regarding let's say there's a small they don't have a very few balance. That they are surely above that. So
Surely, what is
above
true?
that 30% criteria, that's right. Taking commission,
Okay.
they might have taken certain commission. They want them to come out of that. Now,
What is your shareholding in that company?
when I go, let's say, only is less than 5. Or I'm a minority. But in that, so in that,
Same ruling is applicable if the private investment, private equity, the same ruling is applicable if the criteria is same. If the conventional debt is more than 30% in that company, then you cannot invest in that company. Okay, same criteria will be applicable. That's your question. So actually, the, the law which you have mentioned that if there is anything harmful, that would always be haram. Usual. Okay. Okay. Yes, I was thinking to give you the same example to you that this is not a ruling that if anything is harmful or abusing, so that would be always haram. No, the smoking is not haram. Yes, it is harmful. Okay, usually. So that is why Islamic finance is if it is costly. So this is not in usual. This is in exemption, and this is halal. Like the chicken, halal chicken is costly in United States, and haram chicken is cheap, and halal chicken is halal, and haram chicken is haram. Actually, the problem is that there are some costs uh, linked with the Islamic financial institutions, and these costs are not applicable on the conventional financial institutions, and that is why they are charging more. And since I am working with the Islamic financial institutions, and I know what are the challenges, and I know what legal advisors are charging from the Islamic financial institutions, I can tell you the main problem is the expenses of legal in the United States, because legal side is very costly in the United States. And for the conventional banking, for the conventional financial institutions, legal side would be the costly, but not as much as for the Islamic banking institutions, Islamic financial institutions. This is my experience. That is why Islamic finance is very costly here. And only what I know, only there is a monopoly. Only 2 or 3 legal advisors in the United States, they know about Islamic banking, Islamic finance, and conventional banking and conventional finance. And they know about both. And every legal advisor does not touch both the things. That is why Islamic and some other expenses. And these expenses are very high for the Islamic financial institutions. That is why Islamic financial institutions, they are charging more. This is the problem. Yes, please.
These are issue in the home financing, we have 2 contracts, right? These are mentioned that the main contract that is enforced in the Nizar agreement. We have another contract which is very similar.
No. I can tell you again. Only one contract. This is the Musharaka contract. And mortgage contract is not another contract. Mortgage contract is the part of the Musharaka agreement. And mortgage contract is saying that your property is under security because you have to pay rent. You have to pay monthly installment. For that purpose, this property is secured. If you don't pay your property, your rent, then financial institution will sell this property into market. So this is not another contract. This is the Rahan contract. For example, if I sell this mobile to any other person and I give you anything Rahan on Rahan, so no one will sell that Rahan is another contract and sale contract is another contract. Yes, actually, what people think that why Rahan document is separate? Why mortgage document is separate? So that and this is a misconception of the people that they think that why mortgage document is separate. So only one document, only one contract, no second contract. Yes, please.
We talked about like 4 things for the single stock, right? Purchasing single stock. What are the rules for like a basket of ETF?
ETF, same rules because if ETF, for example, all stocks in the ETF should be halal, should be Sharia compliant. If any stock in the ETF is not halal, then this ETF would not be considered halal. That is why only the halal ETF, Sharia compliant ETF, we can invest in it. So in the you can find halal ETFs in the world, in the stock market. You can find halal ETFs. Yes. Which contract? Muraba contract can be used, but not financially feasible because in Muraba contract, the price cannot be changed, and price of Murabaha cannot be variable, and in Musharaka price can be variable. You know that the house financing contract is executed for 30 years. Okay, for 30 years, one rate cannot be feasible financially. That is why Murabaha contract is not feasible for 30 years contract. In Sharia, there are a number of products. For short term, Murabaha is good. For mid term, Ijara is good. For long term, Musharaka is good. Last question. Okay. Bitcoin is not halal because, yes, I was thinking why you are not asking about Bitcoin. Because in every session, one question was about Bitcoin. Bitcoin is not, this is not a currency, this is not mal, and this is very, very clear. And currency the characteristics of currency is that government accepts, people accept, market accepts, shops accept. This is the correct, these are the characteristics of the currency. And currently the governments are not accepting, supermarkets are not accepting, people are not accepting. So this is not mal, this is not the wealth in line with Sharia. So this is not the currency. People are, people say that after some time, definitely scholars will allow. So we will see, inshallah. If that time will come, inshallah, will allow. But this, currently, it is not allowed. And if the situation changes, a scholar will change the ruling. But we cannot give the fatwa based on the future situation. What happens in future, we don't know. But currently, the situation, as per the prevailing situation, this is not allowed. Jazakumullah. Thank you so much.